Have you ever wondered how the ultra-wealthy consistently generate income, even while they sleep? It's not just about having money, it's about making that money work for them through cash flow assets. These assets provide reliable income streams, allowing the wealthy to accumulate more wealth with minimal effort. In this video, we're diving into the top 8 cash flow assets the wealthy prioritize. From AI infrastructure to self-storage, these are the investments that provide consistent, high returns, and they're not just for the rich, they're for anyone looking to build wealth. Let's explore how these smart assets work to generate cash flow and how you can leverage them too. 1. AI data center infrastructure, the backbone of the future. As the demand for artificial intelligence continues to skyrocket, one of the most lucrative investments the wealthy are turning to is AI data center infrastructure. These centers are the physical buildings that house the servers necessary to run AI models and other digital technologies. While data centers themselves function similarly to traditional real estate investments, they provide much higher yields due to the triple net lease structures often associated with these properties. What makes this investment so appealing is that tech giants like Google, Microsoft, and Amazon are the primary tenants of these data centers. These companies sign long-term leases that generate predictable cash flow for the property owners. In return for their investment, the wealthy earn rental income from these massive tenants, who require specialized infrastructure and cooling systems to house their AI technologies. As AI demand grows, these data centers will continue to generate substantial cash flow, making them a top priority for those looking to capitalize on the future of technology. 2. Mineral rights and royalties, profiting from the Earth's subsurface. Instead of buying land itself, the ultra-wealthy often prefer to invest in mineral rights and royalties. This strategy involves purchasing the subsurface rights to land, which means they receive a percentage of the profits generated from minerals extracted below the surface, such as oil, gas, or critical minerals like lithium. The benefit of owning mineral rights is that it allows for the generation of passive income without the operational costs or liabilities associated with owning land or managing extraction processes. This is a low-maintenance, high-reward investment that provides significant returns, especially as global demand for resources like lithium, used in electric vehicle batteries, continues to rise. With the rise of clean energy and electric vehicles, mineral rights have become an increasingly valuable asset for the wealthy, providing steady royalty payments while requiring little ongoing effort. 3. Asset-backed private credit, lending like a bank. With banks tightening their lending standards in recent years, the wealthy have found a lucrative opportunity in asset-backed private credit. This involves providing private loans to mid-sized companies, typically secured by accounts receivable or equipment. These loans often generate 10 to 15% annual returns in cash interest. The advantage of this investment is that it allows the wealthy to act as the bank, lending capital to companies in need of financing while securing the loan with tangible assets. The loans are typically shorter term than traditional business loans, and the asset-backed nature of the credit means that, in the event of default, the investor can recover some or all of their capital by seizing the assets used as collateral. For the wealthy, this provides an opportunity to earn higher yields compared to traditional bonds or fixed-income investments, all while taking on a controlled level of risk. The demand for private credit has surged in recent years as businesses seek alternative financing options, making this a key cash flow asset for millionaires. 4. Luxury short-term rental arbitrage, renting without owning. Another cash flow asset the wealthy are prioritizing is luxury short-term rental, STR, arbitrage. In this strategy, instead of purchasing properties outright, the ultra-wealthy lease entire floors of luxury high-rises or boutique hotels and then sublet them as premium short-term rentals. This master lease model allows the investor to generate massive cash flow with significantly less capital than buying the property outright. Luxury short-term rental arbitrage is particularly profitable in high-demand markets, such as tourist destinations or major cities, where travelers are willing to pay a premium for unique, high-end accommodations. The key to this strategy is the ability to secure long-term leases at a fixed rent and then generate higher income by renting the units out at a premium, often on platforms like Airbnb. This business model is ideal for investors who want to capitalize on the demand for short-term rentals without tying up large sums of capital in property purchases. By leasing and subletting, the wealthy can quickly scale their operations, generating a steady stream of income from multiple properties in a short period of time. 5. ATM and automated kiosk circuits, earning daily cash flow. Some of the wealthiest individuals invest in ATM and automated kiosk circuits, which are often seen as boring investments but offer steady daily cash flow. These investments involve purchasing fleets of ATMs or automated car washes, which charge a small fee for each transaction or service. ATMs charge users a fee for withdrawing cash, while automated car washes charge customers for washing their vehicles. Both types of investments have low operating costs and provide massive tax depreciation benefits under Section 179 of the IRS tax code. For the ultra-wealthy, ATMs and kiosks provide an opportunity to build a cash-flowing business with relatively low overhead. These investments also provide the ability to benefit from tax deductions related to equipment and infrastructure costs, making them an attractive asset for those looking to generate passive income while minimizing tax liabilities. 6. Intellectual property, IP, portfolios, earning from creativity. One of the most lucrative and long-term cash flow assets that the wealthy prioritize is acquiring intellectual property, IP, portfolios. These portfolios typically consist of rights to evergreen music catalogs, patented medical devices, or software as a service, SaaS, code. Each time a song is streamed, a medical device is sold, or SaaS code is used, the IP owner receives a royalty payment. Investing in IP allows the wealthy to earn passive income from the creative work of others, and the income continues as long as the IP remains valuable. For example, acquiring the rights to a music catalog or a patent can provide a consistent stream of royalties for decades, especially when the work or product becomes widely used or popular. This is a highly scalable asset because once the IP is acquired, it can generate income without the need for constant active involvement. As royalties continue to come in from music, software, or patents, the wealthy can use the proceeds to reinvest in other income-generating assets, growing their wealth over time. 7. Self-storage and industrial flex space, real estate with low maintenance. While the wealthy often invest in residential real estate, they tend to prioritize self-storage and industrial flex space for their cash flow potential. Self-storage units generate steady monthly income with relatively low maintenance costs. These facilities are in high demand, as more people seek convenient places to store their belongings, and businesses need space to store inventory. Similarly, industrial flex space, small warehouses typically used for e-commerce businesses, has become one of the highest demand cash flow subsectors in real estate in 2026. As e-commerce continues to grow, businesses need flexible, affordable spaces to store products and fulfill orders. This makes flex space a high-return investment with consistent demand. Both self-storage and industrial flex space offer lower turnover costs compared to residential properties, and they often have fewer maintenance issues. For the wealthy, these investments provide a steady income stream with low risk, making them an attractive addition to a diversified real estate portfolio. 8. Vending franchises and unmanned retail, automation for passive cash flow. The final cash flow asset the wealthy prioritize is vending franchises and unmanned retail concepts. These businesses, such as automated pharmacies or specialty coffee kiosks, operate without staff, offering a high-margin, 24/7 cash flow model. For example, high-end automated coffee kiosks in airports or train stations provide premium products to travelers without the need for employees. Similarly, automated pharmacies in locations like shopping malls or medical centers offer customers the ability to purchase medications and other products without human interaction. The appeal of these businesses is clear. They operate 24/7, generate high-margin income, and require minimal overhead, as there's no need for staff to manage the day-to-day operations. This makes them an ideal investment for the wealthy, who are looking for low-maintenance, automated cash flow streams that offer consistency and scalability. And there you have it, top 8 cash flow assets the wealthy prioritize. From AI data centers to vending franchises, these assets allow the ultra-wealthy to generate reliable, high-return income streams with minimal effort. By prioritizing these cash-flowing investments, they ensure their wealth continues to grow while providing long-term financial freedom. If you found this video helpful, make sure to like, share, and subscribe for more insights on wealth-building strategies and investment tips. Let me know in the comments which cash flow asset interests you the most. I'll see you in the next video.